Hello, I hope you guys are doing well. And now this is the technical and fundamental analysis, moreover, a technical analysis for Australian dollar and Japanese yen, okay, on an H4 chart. So there is something I need to share with you. Like, let's start from the Australian dollar. Okay, what do we know from Australian dollar? Okay, the current rate is 3.85%. Okay, and it's expected to go for a rate cut, okay, of 20 basis point. Okay, and this will bring this rate to around about 3.60. okay, something around this one is something what will happen. And what is the probability? It's around like 85%. okay, there are 85% chances of a rate cut to 3.60%. okay, this is what we know from the Australian dollar. Now let's come to JPY. okay, JPY, let me tell you one more thing. Yeah, no, let me start with this one, JPY first. Okay, what do we know from JPY? Okay, it's expected to go for a hold, okay, on July 31, the same day that we have the meeting from Federal Reserve as well. Okay, and what is expected? A same hold stance is expected, hold to 0.50%, and the probability is somewhere around 90%. okay, so if you look at this section all over here, you can understand that this JPY is into a hold scenario and into a a hawkish stuff. Whereas if you look at the AUD, it's going for a rate cut. Okay, it's going for a rate cut, and when rate cut starts, it means like a downward momentum for your currency that we're talking about. So right now we had this optimism in the Australian dollar because of gold, okay, and all of the other commodity supportive news. So right now we can see this, this mushroom type formed over here, same thing over here in this part. Now over here there is some important element that I need to share with you guys. For example, let's get rid of this drawings and see over here. Like, see this, I'll take you to the order block. Okay, this is an order block from here on the H4. Sorry, oh, wait, let me get this out of the way. Okay, this one, this order block over here, which is acting as a very strong level of support and resistance from the past, and now it's working as a support level. Okay, this one, see, you can mark this level over here as a support, and it's an order block support. It's a very important level. Besides this, if you can look further, if we look at the fib levels, okay, let me show you. That is what I was noticing. Whereas fib, this is the fib levels, so you can clearly see this, that this area over here, okay, this area over here, okay, it is the confluence of H1 and H4 levels on 76 and 61% level. Okay, so this area over here is a huge level of support as well. Okay, let me draw this individually and I can show you. See this, let me get the order block out of the way. See, this area is a support level over here, and then if I draw our order block over here, the order block arrives on the same level. Okay, and then now let me get this out of the way, fib levels as well. Now if we come to the break of structure level, what do we have over here? It's this change of character, and after change of character we have this break of structure. And when the break of structure nullifies, then we can use this level over here as a grab stuff. Okay, liquidity grab or sweeping, whatever you can expect. And then after that, we had this change of character over here, and this change of character again is in the same place, you know, where we have this order block from the H4 and the fib levels. Okay, so what I'm trying to explain you, this cluster over here, this cluster is very important support area, and once if this is broken towards the downside, you can expect the market to move over to the downside. So keep this movement in your mind. And on the other hand, you know, the technical traders love this type of setup because there is a reason for it. Like, let me get rid of all this and I will explain you that in terms of drawing a trend line, it's very easy. These type of levels are very easy. I mean, you can go for your lower levels and you can go to your high, and then you want to see any candle that has not been breached, so you can get your trend line in this level or something like this. See, somewhat from here you can just come here, this from this low to this high, and then you will leave your trend line at the place where none of the candle is breached. Okay, wicks can be breached, no issues. That is this place, somewhere like here. See, okay, this one, no candles breached over here in this line, and then this over here. So technically there has been a breakout towards the downside, and now market is moving in this direction. So any break below this level can warrant and fill this all area over here. Okay, and then, you know, if this happens, we can mark this as a double top or, you know, head and shoulder or whatever on a bigger time frame, you can see. So please keep this in mind. One last thing that I would like to say you, there is one more setup that I have watched on this pair, that is this one. See, the more setups you get over here, the more confidence appears. See, that is this one. If I can go in the sweeping, now I've switched on the inside bar sweep setup, and over here we can see that this was your daily bullish candle over here, and this is your inside bar, and this was a sweep over here. Okay, this one, you can see this level over here. This is your sweeping, and then what happened, market has moved towards the downside. So again, this is a confluence area. Again, we have that support level on the lows of this inside bar. If we get a breakdown, you can expect the market to go downwards. Okay, so keep this in mind. This was something that I was watching, and I'll be here with you guys with some other setups as well. Now let's have a view before I leave. Let's have a view of what pair did we watch earlier? Was it Euro Swissy, right? It was Euro Swissy in the morning. Yeah, it's on the oversold levels. Okay, in the morning we were like bearish on this one. Okay, until now it's going the way we saw it towards the downside. Let's see how it plays out. Okay, guys, this was for now. Do let me know if you have any comments or any questions. I'll be more than happy to answer. Thank you.